Hello and welcome to Zee Commodity Capsule. Here's first wishing all our viewers a very happy new year. So this is the time of the year when we come out with the commodities performance, or rather report card. Let's start with the top performers where precious metals have been a standout performers among the commodities throughout this year, with silver outperforming most of the equity indices and currencies, while gold hit record highs on economic and geopolitical concerns. As far as the numbers are concerned, silver has managed to give one of its best annual performances since 1979, and so is the case with gold, with both the commodities yielding nearly 160% of return as far as silver is concerned, while in case of gold it's been close to 65 to 70% of annual returns this year. Now what we have seen is that precious metals have room for greater gains even next year, that's in 2026, as interest rates are expected to fall, but agricultural and energy products offer little cheer as growing supplies and tepid demand curb any upside potential. Most of the experts think this way. Silver has drawn additional support from the designation as a critical US mineral, ongoing supply constraints and the low inventories, while sustained central bank buying continues to support gold. Same is the case with platinum and palladium. These have been the quiet performers this year, and in fact platinum and palladium have performed equally well alongside gold and silver. They are also on track for strong annual gains, triple-digit percentage gains, if I may say so. Industrial metals, they have turned out to be the strong heroes this year. In 2025, with copper hitting the all-time highs very close to $13,000 a metric ton. Copper on London Metal Exchange climbed to its all-time high at $12,966 a ton this week, marking a near 44% gain in 2025, which by the way happens to be one of its best annual performances since 2009. We have seen that weaker US dollar continues to support these metals. Growing demand from artificial intelligence and renewable energy and mine output destructions continue to support the red metal. Tin made similar gains thanks to the supply disruptions in Myanmar and tightening flows from Indonesia, while aluminium managed to rise nearly 17%. The commodity is holding close to its April 2022 highs, underpinned by China's cap on smelting capacity and a growth in demand from the energy transition technologies. Iron ore traded on Dalian Commodity Exchange, we have seen is supported by surprisingly resilient demand despite falling crude steel output from China and a boost from Beijing's relaxation of home buying in the big cities. LME nickel has barely managed to scrap mid-single digit returns this year, garnering some support from its peers only in last 1.5 months, taking the metal now to 52-week high in the previous trading session. We are seeing nickel garnering some support from the fact that Indonesia's Nickel Smelter Association is forecasting nickel ore demand rising by nearly 40 to 50 million tons to reach nearly 340 to 350 million metric tons next year. Crude oil was amongst the biggest losers in global major commodities. Oil was little changed on Wednesday, but is set to fall more than 17% so far this year as supply outpaced demand in year marked by wars, higher tariffs and OPEC plus output and sanctions on Russia, Iran and Venezuela. BNP Paribas expects Brent to dip to $55 a barrel in the first quarter before recovering to $60 a barrel for the rest of 2026. Last but not the least, let's touch upon some of the major global agri-commodities as well. Raw sugar, Robusta coffee have come under pressure, surrendering about 20 to 22% of its value in 2025. Chicago soybeans are poised to end 2025 on a positive note on China's resumption of imports from US following a thaw in relations, which has erased most of its losses. Wheat and corn are set for 4 to 8% of weaker finish this year, while Malaysian palm oil is down 9% in 2025 on plentiful supplies, but the market is likely to find some support from Indonesian biodiesel mandates.